Alright, hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Right, before we start, please take note of the disclaimer. Right, please note that this is marketing communication and does not contain and should not be construed as containing investment advice, investment recommendation, or an offer of solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, hi Ren, good to see you. Alright, yes. Yep. I see your request for pound dollar and Aussie dollar. Yep, we'll definitely get into those currency pairs as soon as we start the analysis on the dollar index. And then we'll work our way down through the majors as well as the commodities and the indices. Alright, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020 and 2021. Alright, before we dive into the chart and trading view, let's take a quick look at the economic calendar that's lined up for this week. Right, so we've got quite a few things going on. Today, Monday, 1st of July, we've got ISM manufacturing PMI, right, which is expected to show the manufacturing sector contract for the second or third consecutive month again. What will also be closely watched will be the prices index, right? If we see prices in the manufacturing sector in the US continuing to moderate lower, that's also a more positive sign for overall inflation. And on Tuesday, 2nd of July, we've got core CPI, we've got flash CPI estimates for the Euro area, both for the headline CPI and core CPI. That's at 9 a.m. GMT time. Then we've also got Fed Chairman Jerome Powell speaking at 1:30 p.m. We've also got it's a jobs week, US jobs weeks as well. We've got three major US jobs data points that are going to be released. We'll first have Joel's job openings that's going to be released at 2 p.m. GMT on Tuesday, 2nd of July, followed by the ADP employment report at 12:15 p.m. GMT on Wednesday, 3rd of July. And of course, we've also got the highly anticipated non-farm payrolls, as well as the unemployment rate and average hourly earnings that's due on 12:30 p.m. GMT on Friday. Right, so it's quite a heavy calendar this week, as you can see, right, with a few other important data points as well. They're going to be released in between the US jobs data. Right, looking at Euro area CPI, right, so the flash CPI for the month of June is going to be released on Tuesday. Right, that's going to be released on Tuesday here. And we are seeing this flash estimate for headline CPI easing slightly from 2.6 to 2.5%, and we are seeing the flash estimate for the core CPI ease as well from 2.9 to 2.8. Now that's a positive sign, because back in May, right, we saw both headline CPI, right, core CPI and headline CPI accelerate in the month of May, right, with core CPI rising from about 2.7 to 2.9%, while the headline CPI rose from 2.4 to 2.6% year over year. So after a slight acceleration in the month of May, we're now expected to see Euro area CPI moderate lower. Now, should we see the actual result come in line with the forecast or perhaps even lower, that's quite likely going to cause the euro to come under pressure, and vice versa. And conversely, if we see once again inflation accelerating in the euro area, then perhaps we could see the euro receive a strong boost as well. Then moving over to jobs data, right, we can see that in the month of May, or well, rather since March, although jobs have been consistently being added to the US economy, however, we can see the rate of change or the pace that jobs are being added to the US economy based on the ADP employment report has started to moderate lower, right? So we can see that May's result came in at 152,000 workers, right, which is the lowest level in 4 months, as well as being lower than the forecast of 175,000. And what also is to take note that April's figure was revised lower as well, down to 188,000 180,000. So overall, this was a relatively weak ADP employment report. And although jobs are still being added to the US economy, however, you can see May's figure of 152,000 was the lowest figure in 4 months, as well as being coming in under the estimate of 175,000, while the previous month's figure of April was also revised lower. So this was a relatively soft ADP employment report last month. Looking at the BLS employment report, which releases data for non-farm payrolls and the unemployment rate, as well as the average hourly earnings. So taking a look at unemployment rate first, we can see that since March it has started to edge higher. It was around 3.8% in March, 3.9% in April, and then 4% in May. The forecast for June points to the unemployment rate remaining steady at 4%. However, you can see that 4% is the highest reading since January of 2022 as well. So this is a slightly worrying as well, because if we do see the unemployment rate continuing to edge higher, right, this will be indicating some serious concerns about the US labor market, because of course rising unemployment rate would mean that the labor market is starting to crack, and we may see job losses starting to increase, job losses beginning as well. Looking at non-farm payrolls, as you can see now, over the last 12 months, jobs have been added quite steadily to the US labor market, right? The green line here is the average of 232,000, is the 12-month average of 232,000. So you can see 1, 2, 3, 4, 5, 6, 7 out of the last 12 months have been coming in well above this average. So overall, it's still a pretty steady rate of jobs growth over the last 12 months. However, if we do see the unemployment rate start to edge higher, that of course could mean that monthly job gains are going to start to lower, or in some cases perhaps worse, if we do see job losses reported in the non-farm payrolls as well as the ADP employment report, then of course that would be a much more serious sign that the US labor market has indeed started to crack. And of course, if we do see a weak labor market moving forward, that's quite likely going to be bearish for the US dollar, right? So take note, any soft data for the ADP employment report, as well as the non-farm payrolls and unemployment rate, that's going to be going to function as a negative catalyst or bearish catalyst for the US dollar. Conversely, if you see a strong set of jobs data as reported by the ADP employment report as well as the BLS employment report, right, then of course that's quite likely going to function as a strong bullish catalyst for the US dollar. Alright, okay, now let's dive into the charts on TradingView and begin our analysis with the dollar index. Alright, so here we are on the chart on the daily time frame for the dollar index here. So just quickly taking a look at this index on the weekly time frame. We can see that over the last 4 weeks, right, since the beginning of June, we've seen the dollar index climb higher, although it wasn't a very straight climb, right? We can see the long tails here. We can see the long wicks here on the 3rd of June, the week of 3rd of June and the second week of June. We can see the wicks dropping as low as about 104.10 and 104.23, right? So you can see it was a pretty volatile last 4 weeks, right, with long wicks as well. But we've seen this index close in the green over the last 4 weeks. But however, last week's gains were restricted as well. The dollar index rising as high as 106.13, but it reversed quite strongly to close at 105.85, right? So looking at the daily time frame, we can see that the dollar index suffered strong pullbacks last Thursday and Friday as well. Right, because last Friday, we also had US PCE price index, right? The PCE price index is the Federal Reserve's preferred gauge of inflation, and we saw the latest result show that inflation moderating lower as well. So with inflation moderating lower, that's going to cause the dollar to lose its value as well. So that's why we saw the dollar index pull back quite sharply last Friday. So we could see this bearish momentum in the dollar index continue this week as markets reopen later today. So we can probably expect the dollar index to pull back today as markets reopen. So So for today's analysis on the dollar index, right, on the daily time frame, we see the first support for the dollar index coming in at this pullback level here. This is a pullback support level here at 105.18, right, which has taken place on 18th of June, the 19th and 20th, before dollar index bounced strongly. Right, so we have identified the pivot level at 105.18, which is the pullback support level, which also has the presence of a Fibonacci retracement. We started this retracement here from this swing low on the 7th of June, going up to the high on the 26th of June. You can see that the 50% Fibonacci retracement aligns pretty well with the pullback support at 105.18. So we can see that this pivot level here is a pretty strong pullback support level with a 50% Fibonacci retracement. Looking a little further below at 104.68, I see another strong pullback level that's taken place on the 12th of June. Of course, we can see that for this candle, the wick dropping as low as 104.26. And we also see there's a presence of a 78.6% Fibonacci retracement. So that's how the first support has been identified, which is a combination of this pullback that occurred on the 12th of June, followed by the as well as the being accompanied by Fibonacci retracement at 78.6%. Now, in terms of resistance, right, we see a very nice swing high, multi-swing high resistance taking place on the 16th of April as well as on the 1st of May, right? We can see these two multi-swing high resistance taking place at around 106.37, right? It's almost like a double top here, and this is how we've identified the first resistance for the dollar index at 106.37. Now, with last week's weaker than expected PCE data, where we saw the US dollar sell off, and that momentum's quite likely going to resume this week as well. So should we see the dollar continuing to remain weak, we can expect the dollar index to pull back towards this pivot level here at 105.18. So if you expect the dollar index to pull back, then of course that means currency pairs like the euro, pound, dollar are expected to rise, and we can also probably expect gold prices to rise as well. Now, before moving on to the pound dollar, I will start with the euro first, then we'll head on down to the pound dollar and to the Aussie. Alright, hi Reddy. Yes, I see a request for gold as well. Yep, we'll definitely cover gold once we've covered a couple of the major FX pairs, and then we'll move on over to gold. Alright, great to see the request come in. Alright, and finally, before we end the analysis on the dollar index, we've also run a Fibonacci projection here, right? We've also have a Fibonacci projection. Projection involves 3 points. We started the first point here on 8th of March, going up to the swing high resistance on 16th of April, that's the second point, and ending with the swing low on the 7th of April. We can see that we have the presence of a 61.8% Fibonacci retracement that aligns pretty well with this multi-swing high resistance that's taken place on the 16th of April as well as on the 2nd of May. And looking at Ichimoku, let's just see if there's any thing we can, if there's any other information, further information that we can get from the Ichimoku cloud. Let's take a quick look at it. Right. No, so we can see that dollar index is still trading above the Ichimoku cloud here. We do see it's red over here. Remember, green Ichimoku cloud suggests bullish momentum, red Ichimoku cloud suggests bearish momentum, and the cloud itself can also be used to identify as a strong support area. So like the green Ichimoku cloud can be considered as an area of support as well, which also seems to be lining up quite close to the 50% Fibonacci retracement as well as the pullback support here. And perhaps now that I look at it a little bit more clearly, I can probably see a pretty decent ascending trend line as well, right? There's a pretty decent ascending trend line for the dollar index here, right? We can see that the dollar index has bounced off this ascending trend line several times, right? On 12th of June, 25th of June, and of course last Thursday and last Friday as well. So this trend line is going to be pretty important as well. If we see a clean break below this trend line here, this ascending trend line, that's quite likely going to cause that's likely going to trigger further bearish momentum for the dollar index, and we could see it fall all the way down towards the pullback support, which is the pivot level at 105.18. All right, so these are the key levels for the dollar index on the daily time frame. We have the pivot at 105.18. It's a pullback support level that occurred on 18 and 19 of July that has the presence of a 50% Fibonacci retracement, and the first support has been identified at this pullback support level here that's taken place on the 12th of June at 104.68, which also has the presence of a 78.6% Fibonacci retracement, while the first resistance at 106.37 is a multi-swing high resistance taking place on 16th of April and 1st of May that's also accompanied by a 61.8% Fibonacci projection. Alright, so these are the key levels for the dollar index for this week, and take note of this ascending trend line. If we do see the dollar index break below this ascending trend line, we're likely to see further bearish action, and then further bearish momentum is likely to take dollar index down towards the pivot point here. Alright, now let's move on over to the euro. So if we're expecting the euro to fall, then we can also expect dollar index to rise as well. So if you're expecting dollar index to fall, we can also expect the euro to be rising. Right, so after finding strong support here last Wednesday, right, we can see the dollar index has found strong support above 1.0665 several times since the 29th, since the end of April, right? Since the end of April, we can see that this level here at 1.0665 has functioned as a strong pullback support, and it's a level that the euro bounced off last Wednesday as well. So we can expect the euro to continue to rise higher, and where it could run into resistance is at this pivot point here. Now, before we talk about the pivot, we can see that this first support level here also has the presence of a 78.6% Fibonacci retracement. We started this retracement from this swing low at 78. From this swing low that occurred on the 16th of April, ending with the swing high that occurred here on the 4th of June. We can see that the 78.6% Fibonacci retracement aligns very well with the pullback support level here. So of course, if you expect dollar index to break below this ascending trend line and drop towards the pivot, then also we can expect the euro to continue to rise and perhaps potentially rise up towards 1.0809, which is the pullback resistance level that's occurred on the 12th of June, which also has the presence of a 61.8% Fibonacci retracement. Now, this retracement was found by starting from here, this swing high on the 4th of June, ending with the low here on the 14th of June. We can see that there's a presence of a 61.8% Fibonacci retracement. Let's just try and adjust the labeling so it's a little bit more visible. Right, there we go. 61.8% Fibonacci retracement aligns quite well with this pullback resistance here that's occurred on the 12th of June. And of course, the first resistance for the euro is at 1.0922. Right, this is a strong resistance level here. We see a nice pullback taking place here on the 21st of March, after which we see a nice swing high resistance on the 4th of June. Right, we can see two significant areas where the euro has run into resistance, first on 21st of March and then as recently as the 4th of June as well. So this is a very significant resistance area and at 1.0922, which is a level that we're using to identify as the first resistance. All right, okay, then let's move on over to pound dollar, right, or otherwise known as the cable, right? This currency pair is also known as the cable. All right, Ren will now cover cable and Aussie, and then after that we'll move on over to gold as well. All right, so of course, if we expect the euro to be rising this week, or at least today, we can also expect the pound dollar or cable to do so, right? So similarly, we are expecting cable to be rising as well, and where we could run into resistance, it is at this pivot level here at 1.2721. Right, we can see that this pivot level here is an overlap resistance level, right? We can see cable first finding support on the 7th of June, 10th of June and the 11th before retracing higher and finally reversing the drop lower, and then as it broke under this level here, it retraced higher back up towards 1.2740, but it once again stalled and reversed the drop lower. So this creates an overlap level here at 1.2721, which we are identifying as the pivot for this week. So this pivot level here also has the presence of a 50% Fibonacci retracement. We began this retracement from this swing high here on the 12th of June, going down to this low here that occurred last Thursday here. You can see there's a 50% Fibonacci retracement. So that means if you're expecting dollar index to fall, so of course that means currency pairs like the euro and cable are likely to rise. So it's likely to rise towards this pivot level here, which is an overlap resistance at 1.2721. So we can use this pivot level here to help us identify any potential take profit levels for any long cable positions that we have. So take note, because we are expecting because we're expecting dollar index to break below this ascending trend line, and if this break does occur, right, we can expect further bearish momentum for dollar index, so it should be falling towards the pivot. So that means we can expect currency pairs like the cable to continuing to rise higher, right? We can see that it's stabilized at around 1.2613 last Wednesday and Thursday. So if we do see this retracement to the upside continue, then we have a potential long opportunity for cable with a potential take profit level at around the pivot, which is the overlap resistance at 1.2721. Now in terms of support, there's another nice overlap level here, right? You can see cable running the resistance here on 29th of April, 30th of April. Then it proceeded to break above it on the 3rd and 6th of May. And then after that, retrace, dropping as low as 1.2445 before reversing once again to climb higher. So you can see here that this is a pretty decent overlap level here at 1.2561, which we're using to identify as the first support. Now this level here also has the presence of a 50% Fibonacci retracement. We began this retracement from this swing low on the 22nd of April and ending it with the swing high on the 12th of June, right? We can see that the 50% Fibonacci retracement aligns quite close to this overlap level here, which is the first support at 1.2561. And of course, finally, the resistance level is pretty clear. We see a nice swing high resistance taking place on the 7th and 8th of March. And we see another swing high resistance taking place on the 13th of June, right? Two very significant areas where cable has run into resistance. This is a multi-swing high resistance level here at 1.2858, which is what we're using to identify as the first resistance. So take note for cable, right? So especially if we see dollar index break below this ascending trend line and drop lower, we can expect cable to continue to rise higher, and where it could potentially stall is at this pivot level here at 1.2721. So what this basically means is we may have any long opportunities for cable, right? Should you have any long opportunity or long trades for the cable, we can identify a suitable take profit level at around the pivot level here, which is at 1.2721. All right, now let's move on over to the Aussie, and then we'll cover gold as well. Right, for the Aussie as well, we can see Aussie, generally when you look at it since the 7th of May, we see the Aussie actually just range sideways, right? You can see here it's actually been ranging between 65.72 and 66.95, right? So you can see here it's actually been ranging in between these two levels since the 8th of May, so nearly a period of now coming up to 9 to 10 weeks, right? It's just been ranging between these two levels here. So we can expect the Aussie to probably continue rising this week as well, right? Or at least today, right? We can see dollar index expecting to fall. So we expect Aussie to rise as well, but we do see a strong resistance level here, right? This is a pullback resistance level that's been in place since the 15th of May. This pullback resistance level is 66.95, has been identified as our pivot. This pivot level here also has the presence of a 127% Fibonacci extension level. This extension level was found by running a retracement from this swing high here on the 9th of April and ending with the swing low here on the 19th of April, right? We can see that the 127% Fibonacci extension level aligns quite close to the pivot as well. So this is a strong resistance area for the Aussie that starts from 66.92 going up to as high as 67.21. Right, so that means should you have any long Aussie dollar positions, right, it's quite likely going to stall around this level here or around this region. And should we see the Aussie stall around this region, we may have a potential bearish reversal opportunity as well. So if we do see the Aussie rise into this pivot level here and stall around 67 cents, 67.15 cents, we may have a potential bearish reversal on hand here. And of course, should that bearish reversal take place, right, we can expect, I do also see a nice intermediate support level here, right, looking at this pullback level here, right. This is a pullback support level at 66.31. We can see since 21st of June, the Aussie has found nice support above this level here. So we have a nice intermediate support level here as well. So should we see the Aussie rise into this pivot zone here, which is identified as a pullback resistance, and if we do see it potentially stall here and reverse to drop lower, right, then we can identify the first take profit level for the Aussie at about 66.31. And should it continue to drop lower after hitting this pivot, we may see that we can identify the next take profit level at around the first support of 65.72. So take note, we expect Aussie to continue rising as markets reopen, but it could stall around this resistance area here, this pullback resistance area here, and potentially reverse to drop lower. So if it does reverse off this level, we have a potential bearish reversal. So we have a short opportunity for the Aussie, and we can identify a potential take profit, or the first potential take profit can be identified as 66.31, which is this pullback support level that's been in place since 21st of June. And then the next support level or the next TP level can be identified at the first support at 65.72, which is a pullback support level that's been in place since 8th of May, right? 8th of May, that's right. Now, this pullback support level also has a presence of a 38.2% Fibonacci retracement, right? We found this retracement by running us starting from this swing low here on 19th of April, going up to the high here on the 16th of May. We can see that the 38.2% Fibonacci retracement aligns quite well with this pullback support, which is also known as the first support here. All right, okay, now let's move on over to gold. All right, hi Freedom Fighter, you have a request for ES futures. All right, okay, we can cover that as well, but I'll be using the US 500, right? I'll be using the 500 to represent the ES futures, right? So ES futures represent the S&P 500 mini futures contract. All right, okay, but before that, let's cover gold. So the ticker symbol for gold is XAU USD. So this tracks the prices tracks the spot gold prices here. Now, of course, if we expect, once again, coming back to the dollar index, if we expect dollar index to pull back, right, especially if it breaks below this ascending trend line, then we can expect gold prices to sort of stabilize and perhaps resume this and perhaps rise towards the pivot here. So take note, gold has been moving sideways, right? If you actually look at it, since 6th of June, it's actually remained under this level here at 2,375 while being supported at 2,286. This is a strong pullback support level that's been in place since 30th of April. And as you can see here, since 6th of June, gold prices have actually just ranged between these two levels. We're seeing sideways price action for gold since the 6th of June. So over the last 3 weeks, we've seen it just range between here, not doing anything, right? You can see here very clearly in February to April, a very strong bullish momentum, right? A bullish rise. Then we saw a strong pullback as well that occurred in the towards the end of second half of April, early May, and then after that we see it rising very strongly again, rising to a all-time high of $2,450 per ounce back on 20th of May, stalling around this level before reversing to drop lower once again. But since then, since 5th of June, so the last 3 weeks, is pretty much done nothing just but trade sideways. Now, if we expect, once again, dollar index to fall, right? If we expect dollar index to fall, then that could provide some lift for gold prices. So we could see gold prices continuing to rise. So if we do see it rise, it could rise up towards this pivot level here at $2,375 per ounce. This pullback level has been identified as a this pivot level has been identified as a pullback resistance that's occurred on the 6th and 7th of June, and we can see that this pullback resistance level here also has the presence of a 61.8% Fibonacci retracement. We found this retracement by starting from here, this swing high on the 20th of May, going down to the swing low on the 7th of June. We can see that the presence of a 61.8% Fibonacci retracement aligns very well with the top of the wick here that occurred on the 7th of June, right? And of course, the first resistance for gold is at $2,431 per ounce. We can see like a very nice swing high. Oops, hang on, a multi swing high resistance here, right? We can see running into resistance here. The first swing high resistance here taking place on 12th of April, and then the second one here taking place on the 20th of May, right? So we can see two strong resistance areas here. And similarly, we can see the nice swing low support taking place here on 2nd of May, another pullback support level here on 7th of June, and we can even argue that last Thursday, Wednesday and Thursday, gold prices found support here as well. And just zooming out a little bit, right? We just zoom out a little bit here for gold. We can also see we have started a Fibonacci retracement starting from this swing low, right? This swing low here on the 6th of October, going up to the all-time high, right? The all-time high on 20th of May. We can see that we have a presence of a 23.6% Fibonacci retracement aligned quite close to this first support as well. All right, so if we expect dollar index to fall, we may see gold prices rise higher. So then we have a potential long opportunity for gold, and that take profit level for gold can be potentially identified at this pivot level at $2,375 per ounce, which is a pullback resistance level that took place on the 7th of June, which also has the presence of a 61.8% Fibonacci retracement. All right, now let's move on over. All right, hi, yeah, good to see you as well. All right, okay, let's move on over to US 500. So US 500 is the instrument that tracks the S&P 500 futures contract, which is also similar to the ES futures as well. So let's just cover that now. Now, looking at US 500, let's start on it on the weekly time frame. So US 500 has been in a strong uptrend. Of course, US equity markets have been in a strong uptrend since October 2023, right? Rising very strongly, especially for the US 500 from about 4,130 going to as high as 5,282. So back in April of this year, it formed a new all-time high after breaking above this previous resistance here, right? You can see this was the previous all-time high that occurred in January of 2022, and this level was taken out on 15th of Jan, right? The previous all-time high was taken out in the middle of Jan earlier this year, and it made a new all-time high back on the 1st April at about 5,294. Now, of course, the new all-time high has been made here at around 5,523. Now, looking at this very strong run in equity markets, right, we can expect US equity markets to continue to rise further, and where it could run into resistance, the next resistance area has been identified by this 61.8% Fibonacci projection, right, which is the pivot level at 5,656. Now, take note, because US 500 is trading close to its all-time high at 5,523.21. There's no other region that we can reference to identify, right? So take note, previously we could have used this previous all-time high to identify a resistance level here back at the end of 2023, and as the US 500 continued to make new all-time highs, there's nothing for us to reference, so we have to rely on Fibonacci tools such as Fibonacci projection to identify the pivot and the resistance, right? So we're using this projection level here, starting from this point 1 on 23rd of October 2023, going up to point 2, which was the previous all-time high in April, and ending with the pullback here on 15th of April. We are using the 61.8% Fibonacci projection and 78.6 Fibonacci projection to help us identify the pivot and the first resistance here. So if we do see equity markets continuing to rise further, right, we can expect US 500 to hit the pivot here. So for any long US 500 trades that you may have, right, a potential take profit level can be identified at the pivot at 5,656, which is a resistance level that's identified by the 61.8% Fibonacci projection, right? And then of course the next resistance level is identified by the 78.6% Fibonacci projection, which lies at 5,851. And of course, the first support for the US 500 is this overlap level here, right? We can see here. We have a nice overlap level here at 5,326. We can see the US 500 previously initially rising into running into resistance here on 16th of May till the 30th of May. So for a period of 2 weeks it ran into resistance here, pulled back a little bit before breaking higher, finding support for about 2 or 3 days before bouncing higher as well. So this creates a very strong overlap level here that also has the presence of a 38.2% Fibonacci retracement, right? So we found this retracement level starting from here, this swing low on the 19th of April, going up to the all-time high that was formed last Friday. And we can see that this overlap support, which is the first support at 5,326, also has the presence of a 38.2% Fibonacci retracement. Right, and also I would like to highlight this ascending trend line as well. There's a nice ascending trend line for US 500 as well. We can see that this instrument has bounced off this ascending trend line several times, right, on 2nd of May and the 31st of May as well. So this is once again going to be a potential resistance support area as well. This ascending trend line can be a potential support area for US 500. So should we see it stabilize around this level here, it could bounce off the ascending trend line and resume the uptrend towards the pivot. All right, okay. With that, now let's move on over to oil, right? And also if there's any other requests that you may have, all right, do let me know if there's any other further requests for any of the major currency pairs or the crosses or the indices as well, right? So anything else, do let me know in the chat box and I'll be more than happy to go through the analysis with you. All right, let's cover crude oil, right? So the instrument that tracks WTI crude oil futures is XTI USD. Right, so looking at the daily chart for XTI USD, so this instrument tracks the WTI crude oil futures. We can see that crude oil, after finding strong support here, right, we can see a nice swing low support taking place on 4th of June, right? The market shows us a very strong swing low bounce of $72.73 back on the beginning of June, right, the 4th week of June, and we've seen a nice strong bullish rise for XTI USD. So I think we can expect this bullish momentum to continue, right? However, take note that after breaking out of this previous resistance level, right, this was a resistance level here at $80.60, right? After breaking out of this resistance level here, we can see crude oil prices XTI USD stabilize above this level several times, and it does look like last Friday crude prices were pulling back as well. So if it does continue to pull back today as markets reopen, it could find support at this overlap level here. Take note, this level here at $80.61 is an overlap support level, which has been identified as the pivot. So should crude prices pull back, XTI USD could pull back towards the pivot level, and if it does stabilize around here, you have a potential opportunity to go long on XTI USD, right? So you can see here the last Friday XTI USD hit a high of $83.21. After that, it proceeded to reverse and close down on the day. And should we see this pullback continue, it could find strong support at this overlap level here, which has been identified as the pivot, and then we may see it stabilize and reverse to resume the uptrend. So if we do see that bullish bounce occur, we have a pretty decent opportunity to go long on XTI USD at around the pivot level, and then the target, the take profit level, a suitable take profit level can be identified at around the 78.6% Fibonacci retracement. This retracement has been identified as this pullback level here that occurred on 26th of April. Right, and this pullback resistance level here, right, so the 78.6% Fibonacci retracement was found by running a retracement from here, this swing high on the 5th of April, going down to the swing low on the 4th of June. Right, you can see the 78.6% Fibonacci retracement aligned pretty well with this pullback here that occurred on the 26th of April. In addition, this overlap support, which has been identified as the pivot, also has the presence of a 23.6% Fibonacci retracement, right? So this retracement was found by starting from this swing low on the 4th of June, going up to the high of last Friday, right? And we can see that there's the presence of a 23.6% Fibonacci retracement with the overlap support, which is the pivot. And of course, the first support at 77.81 has been identified as this pullback level here that's been in place since the 11th of June. Since 11th of June till the 17th of June, XTI USD has found strong support here before moving higher. And this level here, this pullback level here also has the presence of a 50% Fibonacci retracement. All right, so we can see generally a nice, very nice swing highs and swing lows for this instrument here, right? We can see a nice swing high taking place here on 9th of April. Then we see another nice swing low taking place here on the 4th of June, right? Very significant support areas and resistance areas here. So if we do see XTI USD continuing to climb higher, and especially if it breaks the first resistance here at $84.38, then of course the next resistance is going to come in at this swing high resistance that occurred in the first week of April, right? This is a strong resistance area at around $87.93. All right, okay, if there's no other requests, then let's just move on over to let's go back to one of the other currencies. Let's take a look at dollar yen. Right, let's take a look at dollar yen as well. We can see dollar yen. Let's look at it on a weekly time frame first. We can see that this currency pair has been in a very strong uptrend since 16th of Jan 2023, right? You can see after pulling back very strongly, after pulling back very strongly in the last quarter of 2022, dollar yen found strong support in the first week of Jan 2023, right, and has proceeded to rise very strongly, right? Okay, it dropped as low as 128 dollars per yen, right? About 128 is dropped very low here. I'm sorry, 128 yen per dollar, right? So you can see it's dropped as very low, as low as this level here, and proceeded to rise very strongly. Of course, there were strong pullbacks as well at the end of December last year, but generally you can see a very nice strong bullish uptrend as well. All right, hi, yeah, okay. When to open a position with gold DXY correlation? All right, definitely. We'll get back to that once I cover dollar yen. Now, looking at dollar yen, right, it's quite hard to identify. Dollar yen is not trading at all-time highs, but it's trading at multi-decade highs. And to like truly appreciate that, we have to move on over to the monthly time frame, and we look at dollar yen on a monthly time frame. We can see how strong this rise has been, right? So this pivot level here at 163.73 has been identified as a pullback resistance that occurred on December 1986. Previously, this was a significant swing high resistance here that occurred in May of 1990, right? This level here at around 159.40, right? Now this level was taken out last week. This was a very significant swing high resistance that occurred in May of 1990, right? This was a multi-decade high, like a 24-year high, which was taken out, and now the next resistance is likely to come in at around 163.73, which has been identified as a pivot. So you can see here, looking at the monthly chart for dollar yen has risen tremendously over the last few years, right? Especially since 2020, right? Since 2021, it's risen very strongly. It's not trading at all-time highs, but it's trading at multi-decade highs right now. It's trading at almost at a coming close to a 30-year high, right? Almost a 28-year high here. Okay, now coming back to dollar yen. Now, how did we identify the? Okay, we know how we've identified the pivot, right? The pivot at 163.73 has been identified as a pullback resistance level that occurred in 1986, right? Now, how did we identify the first resistance? Right, first resistance was found by running a Fibonacci projection. So this projection was found, right? The 78.6% Fibonacci projection and 100% Fibonacci projection were found by running starting from point 1 on 11th of March, going up to point 2 on 29th of April, and ending at point 3 on the 3rd of May. We can see that 78.6% Fibonacci projection aligns quite close to the pivot, right? Which is that pullback resistance that occurred back in 1986. And we are then using the 100% Fibonacci projection to identify as a first resistance. Now, should we see dollar yen continuing to rise higher? Remember, the yen has been very weak since looking at it the chart here, after the strong pullback here that occurred at the end of 2023, right, it has found strong support at around 141, and since then, since January of this year, it has found it's been a very strong bullish uptrend as well. So this uptrend is likely to continue, and then the dollar yen is quite likely to run into resistance at around 78.6% Fibonacci projection here. So that means for any long dollar yen traders, you may use this pivot level as well as the 78.6% Fibonacci projection to identify any potential take profit for any long dollar yen trades. But also take note, because it is trading at quite extended levels, this raises the risk or possibility of the Bank of Japan intervening in the open market. So if we do see the Bank of Japan intervening in the open market, we can expect dollar yen to pull back very strongly, which is what happened back at the end of April and early May. So over this period here, in the first week of May, is when the Bank of Japan intervened in the open currency markets, and they were selling US dollars and to buy back the yen in the open market. And when an intervention measure like this occurs, it causes the dollar yen to reverse and drop very sharply. So take note, any long US dollar traders, dollar yen traders, take note of any potential intervention measures which can cause this currency pair to pull back very sharply. All right, now let's move on back over to gold and dollar index. All right, coming to your question of when to open a position with gold dollar index correlation. Right, so if we see the main thing I would say is I would like to see dollar index break below this ascending trend line here, right? So if we do see, we can see for now, okay, let's zoom in a little bit on the dollar index. We can see that the dollar index has been in a strong uptrend since 10th of June, and it has bounced off this ascending trend line several times, right? We can see it bouncing off this level here on 12th of June, 25th of June, and of course as recently as last Friday. Now, if this ascending trend line gives way, right, if this ascending trend line gives way, that means we see the dollar index break below this ascending trend line. That would then probably be the signal for us to go long on gold, right? So for now, gold has sort of closed at around $2,326 per ounce last week, and especially if it manages to stay above this first support here, this first support can be identified as a potential areas as well. So should we see gold prices pull back and find support at around 2,286 as well, this could be a potential buying opportunity for gold around here, right? Take note, if gold prices pull back, we find support here and stabilize. If it stabilizes around $2,286 per ounce, this is another buying opportunity for gold here. And at the same time, if we do see dollar index break below this ascending trend line, that's also a potential signal to go long on gold as well. All right, I hope that's helped to answer your question for today, right, on the correlation between gold and DXY. Right, we still got a little bit of time, so let's just cover Okay, we've covered dollar index, the euro, cable, XTI, USD, gold, US 500, covered Aussie as well, dollar yen. Right, is there anything else you guys would like me to cover? Are there any other currency pairs or commodities? All right, okay, if not, then okay, before we end the session, I'll do one more analysis, but before that, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback with regards to today's analysis. All right, I'm just starting a poll with regards to today's webinar. Right, really appreciate it if you guys can give your feedback with regards to today's session, and then we'll wrap up the session with one more analysis. Hi Sadelmo, we've already covered gold, right? We just covered gold again for the second time. If there's anything else I would like, then I'll cover that as well, because we've already covered gold twice already. So yeah, I won't be doing that again. All right, thanks everyone for the feedback. I truly appreciate it. Just going to keep it running for a little bit longer. All right, great. All right, thank you so much. All right, okay, there's a question by Yaya. I'm waiting for price to touch the DXY pivot. Okay, all right, okay, just coming back. Okay, all right, DXY pivot is at 105.18, right? Okay, so if you actually wait for gold to buy gold when dollar index is hit here, it's actually too late, because take note, because dollar index and gold have a inverse correlation. So that means when dollar index is dropping, gold prices are rising. So if you actually wait to buy gold until dollar index has hit the pivot, it's actually too late. You've already missed out on the move. You should actually be looking to go long on gold when dollar index breaks below this ascending trend line. When dollar index breaks below this ascending trend line, that's a potential signal to go long on gold. Now the second signal to go long on gold is should it pull back towards this support level here. So if gold pullbacks towards this support level here and stabilizes around 2286, that's another potential entry to go long on gold, right? Take note, there's two scenarios here. First scenario is if dollar index breaks below this ascending trend line, this is going to give us a potential signal to go long on gold, and that could mean going long on gold at around maybe $2,220 per ounce or $2,330 per ounce, right? Remember, that's the first signal. Second signal is if we don't get this. Second signal is if we see gold prices pull back towards the first support here and stabilize. That's another potential opportunity to go long on gold. All right. Okay. Hi. Okay. And Weddy, could you help to explain what is this? Sorry, it's being all right, Bitcoin. Right. Okay, that's great. Let's wrap up the session by looking at Bitcoin. All right. Awesome. All right. Welcome, Yaya. Okay, let's wrap up the session by taking a look at Bitcoin. All right. Okay, great. Perfect. Okay, here we are, daily chart for Bitcoin. Right, so looking at it since after this very strong run up in Bitcoin in the first quarter of this year, right, from January up to mid-March, we can see it rising strongly from about $40,000 all the way high to a $73,843. Since then, Bitcoin, since making this new all-time high on 14th of March, right, if I'm not mistaken, this was the new all-time high that was formed in March of this year, right, looking at the monthly time frame. But since hitting this all-time high, Bitcoin prices have actually sort of just traded sideways. If you actually look at it, right, it's actually just traded sideways here since mid-March. Okay, maybe not the best color to highlight the sideways price action, but okay, maybe this is a bit better here. So you can see here, since middle of March, Bitcoin has ranged approximately between $58,000 and about $74,000 here. It's actually ranged sideways between these two levels here, not finding any clear direction as for now. But of course, we do see a nice strong downtrend that occurred in the second week of June, right? Second week of June, Bitcoin was trading at around $71,700 and it proceeded to drop very sharply, hitting this pivot level here on Monday, last Monday, before stabilizing, and looks like to potentially rise further here. So we can see that Bitcoin has actually hit this pivot level here, which is a pullback support, right? It's a pullback swing low support here, right? We can see a Bitcoin bouncing off 57,971 back on the 2nd of May, and then once again last Monday stable, bouncing off this level once more. So we can see a very strong pullback support level that's been identified as a pivot at 5,252, which also has the presence of a 50% Fibonacci retracement. Right, we can see a nice pullback support level here, and we can see last Monday Bitcoin has bounced off this pivot once more, and it does look to have stabilized. It stabilized for the rest of the week and over the weekend, and it looks like it could rise up towards the first resistance. Right, so any long Bitcoin traders, should there be any long Bitcoin traders, right, and especially with price stabilizing around 61,000, it does look like it's going to retrace higher, right? So if it does retrace higher, we can identify several resistance areas. We have identified the 61.8% Fibonacci retracement as the overlap resistance level here, and I also see another intermediate resistance at around the 50%. So let's keep 50 and 61.8% Fibonacci retracement. So I also see another pretty decent overlap level here as well, right? You can see another nice overlap level here. I like to identify this level as an intermediate resistance at the 50% Fibonacci retracement. So what I'm trying to say is, if we see Bitcoin continuing to stabilize here and rise higher, we have a potential opportunity to go long on Bitcoin, and your first take profit level can be identified as the 50% Fibonacci retracement, so that's at 65,159, and the second take profit level can be identified at this overlap level, which has been identified at the first resistance, which is around the 61.8% Fibonacci retracement, right? So that's around 66,767. Hi Watson. No, I don't think the time has been changed. I think it's always at in GMT time. This is about 8 p.m. Yeah, if I'm not mistaken, this is always 8 p.m. GMT time. I don't believe the scheduling has changed for this time slot, but I can do check. All right, I'll do check on this because it's always you're right. It should be at 2200 hours GMT time. All right, so okay, did it start at 2300 hours last week? All right, okay, let me go back and check. All right, but usually you're right, the schedule is for 2200 hours GMT time every Sunday. All right, okay, so we've come towards the end of today's session. All right, thanks everyone for tuning in, and for those of you who may have missed out on this session, take note, this is going to be uploaded onto YouTube as well, so you can catch this replay on YouTube very shortly. And of course, do look out for all upcoming webinars by IC Markets as well. So later on today at around 9:30 a.m. GMT, right? 1st July, 9:30 a.m. GMT. There's another live analysis session as well. So do look out for that webinar later on today. All right. Thanks everyone for tuning in to today's session. Hope you've had a great time. So before we wrap up, just quickly go through this week's economic calendar once again. Right? There's quite a few things going on this week. Right? We've got ISM manufacturing PMI on Tuesday. On Monday, 1st July. We've got ISM services on Wednesday. We've also got inflation data out of the EU, all right, out of the Euro area. We have flash CPI data for the month of July. July or June? okay, wait, let me see. This is for June. Sorry, we have flash CPI data for the month of June as well. And it's also jobs weeks, right? It's also US jobs week. We've got JOLTS data on Tuesday, 2nd of July. We've got ADP employment report at 12:15 p.m. GMT on Wednesday, 3rd July. And of course, we have the highly anticipated non-farm payrolls along with the unemployment rate and average hourly earnings that's out on Friday, 5th of July, 12:30 p.m. GMT time. All right. Okay, hi Watson. Okay, usually it is at take note when we are referencing timing here, just like how we do on the calendar, right? We are referencing GMT time. So this webinar is usually run on 2200 hours GMT, right? So that's at 10 p.m. GMT time. All right. So take note of that, and I'll also check on. Yeah, actually it shouldn't change. It's always fixed at 2200 GMT time. All right. Okay. Thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars by IC Market for the rest of this week, and also 1st July 9:30 a.m. GMT. There's another live analysis session as well. So do tune in and for that session too. All right. Take care. Thanks everyone, and have a great trading week.